This one's a bit different.
This time is a little bit different, Dan. OPEC members, or what I've been hearing on the ground, that they're watching this NOPEC bill very, very closely. This NOPEC bill has advanced quite a lot in a span of a year. It advanced twice. And because President Trump, before even becoming president, was well known for bashing OPEC, so there's a little bit of fear that this bill might go through. Over the past, I mean, any OPEC veteran would tell you over the past couple of decades, they've been similar threats. But this time, because there is some anti-US sentiment, anti-Saudi sentiment within Congress, especially after the incident with the Gamal Khashoggi murder last year, there is some concern that this bill might pass.
Okay, so my understanding is that it has gone through the House Judiciary Committee and it's now on its way to the floor. As you point out, President Trump really has a distaste for OPEC, so this is an amazing tool of leverage for him. If he did sign it into law, what would that mean for OPEC and what is the consequence here?
Okay, President Trump and the Congress right now are calling OPEC a cartel. Again, this is not something new that they've called OPEC a cartel before. It means that OPEC members will be subjected to U.S. antitrust laws. We still don't know the full extent of that. It's never passed through before, so it's really hard to tell. But we're seeing many of the OPEC members show concern, and especially over their investments in the U.S. Passing something like this would hurt the U.S., especially with their allies here in the Middle East region. So people are kind of going back and forth about this, and they're saying, I mean, would Trump really pass this bill that would hurt his relation, or support U.S. consumers that are seeing, for example, a hike in gasoline prices? I just want to say one thing that's quite interesting is that this NOPEC bill is quite linked to prices. If we see prices creep up above 70, this bill is likely to gain a lot of traction.
Okay, and Jemana also has a question for you.
Amena, that's a nice segue for me, because I actually wanted to ask you about the most recent price action in oil. Since the beginning of the year, we have seen a rebound of about 20%. We're obviously not back to where we were last October. How much of the rebound in oil prices do you think is on back of just simple general markets in risk-on territory, equity markets doing well, positivity about trade talks between the US and China, versus, say, more oil-specific phenomenon?
Jemana, I mean, it's a mixture between both. Macroeconomic indicators, of course, have an impact on what we're seeing in the market now. But if we look at the fundamentals, we are seeing a tightening in the market. We're estimating at Energy Intelligence that around 800,000 barrels per day is being taken off the market because of voluntary cuts, and about 900,000 barrels a day are involuntary cuts. And we're seeing also clear indications from major producers such as Saudi Arabia. Minister Khalid Al-Falih mentioned that in March, their production is going to drop to 9.8 million barrels a day. And so far, we're hearing on the ground, like just heading into this OPEC meeting, which is supposed to happen in April, that they're looking at a further extension of the current deal. Couple that with the U.S. sanctions on Iran and Venezuela. So, I mean, the market is tightening up, and that's evident, and that's moving prices.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.